Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and I'm really excited to say that this is our 1 year anniversary. That's 52 episodes of the Commercial Property Podcast, and thank you so much to everybody who's listened to this over the last year. I couldn't be more grateful for you joining me every single week to listen to the podcast. I meet people when I do talks around the country, and when I go to networking events, and they say they've been listening to these back to back on journeys. And I genuinely couldn't be more grateful. So thank you all so much. And I so hope that you're getting some great value out of them. If anybody's got any suggestions for the next year, then I'd love to know kind of what you'd like to know about with regard to commercial property so that I can help you even more. So I was thinking about what to do for the 1 year anniversary podcast. And I think what we can do is have a little look back in terms of where we've come over the last year in the commercial property market. We can also look at what's working now, and I'll get my crystal ball out and I'll do some predictions for the next year ahead. So we'll see how I get on when we listen to this back in November 2026. And I think it's fair to say that over the last year, we've really been in a bubbling along the bottom. Now, we call it the bottom. Obviously, nobody knows when the bottom is. And I think that's one of the mistakes that investors make, is that you try and buy at the bottom or try and predict the bottom. And ultimately, even the best kind of economic researchers and people who predict all these trends will find it very, very difficult to predict what the bottom is. But obviously, if we look at what's happened over the last 3 years, Liz Truss had her disastrous budget, bond yields rocketed, and they haven't really come down since, honestly. And the present government isn't particularly doing much to give the markets confidence. And commercial property is very closely tagged to bond yields. So as long as bond yields remain high, commercial property yields will remain high. And obviously what that means is that prices remain lower. So we're definitely been bubbling along in a down market for the last 3 years, and there's been lots of false dawns. So they've not been false dawns that I've bought. Actually, I've not thought that the market was ready to recover, but we've had, in December at the end of last year, 2025 is going to be the year of the recovery. We had this in the spring. The summer is going to be the year of the season of the recovery, and we haven't seen it. There's been more investor activity in some sectors because there's just a weight of money wanting to invest in commercial, but ultimately we haven't seen a recovery in the commercial property market. Now, obviously, these kind of economic events, things that happen in markets, it very much depends what pair of spectacles you're wearing as to whether you think this is good or whether this is bad. If you are an owner and you're coming off finance and you're potentially looking at down valuations and you're looking at potentially lower loan to values because you don't hit the interest cover ratio anymore, or your tenant's gone, or the rents have gone down on your property, or whatever, kind of as a result of COVID, for example, or the down market, then obviously it's not great news that the market's not recovering. But if you are looking to get into the commercial property market and you are looking to buy commercial, then genuinely this is one of the buying opportunities of a decade. And I'm going to explain to you in a minute why I think that 2026 is just going to get better. So we've definitely seen this. I mean, I've been calling it the window opportunity. I keep trying to think of a new catchy title, but ultimately the window of opportunity is what sums it up. we're in these cycles, these periods of time when it's a buyer's market, and that's what we've been experiencing for the last 3 years. And I've been involved in commercial property now for over 30 years. And I've seen what happens in these markets. I've seen where the opportunities are. And I'm seeing in real time what myself and my clients are doing at the moment. And so I'll give you some pointers based off that. And obviously, I'm in the really fortunate position that I can see what's happening across the country. I've got lots of clients working in lots of different locations. So as well as my own investing, I can see what other people are doing. Obviously, I advise many clients on what they're doing, and I can also see what's happening in the markets. I know the strategies that are working at the moment. I think the first thing to say on that is that it is not a commercial agent's job to talk down the market. So don't be surprised. I have a lot of people coming to me saying, well, prices are still really high, or I can't get deals to work in that area. Well, commercial agents aren't going to unilaterally just reduce asking prices. That's just not an agent's job. An agent's job is to keep the market buoyant and to make sure that it's a very active market. And so, and to ultimately sell properties for their clients. So an agent's job is not to reduce asking prices. So don't be surprised if you see asking prices still as high as they were. Obviously, we saw a reduction in asking prices after the Liz Truss budget. And then we've kind of been, as I say, been bumbling on the bottom. But what these asking prices, that they hide is the fact that there are motivated vendors out there who are open to offers. And, the telltale signs of motivated vendors, property's been on the market a long time with little interest. You will very rarely see prices being reduced in the commercial sector, so you can't really rely on that. But yeah, if you can look at where prices have been reduced for quite some, properties on the market for quite some time, you can look at where there's certain sectors. Obviously, we know that retail fell massively in value after COVID or during COVID. And we know that there's certain locations as well that potentially have been affected. And there's certain types of property as well where actually prices are really high and they're being achieved. So the question for you as an investor is, what do you want to invest in? Because permitted development, properties with permitted development opportunities, because there's been a lot of noise around this, agents are now pricing in permitted development rights on, say, shops with uppers. And so expect, especially in the southeast and the south of England, expect to pay high prices. Obviously the permitted development rights are only in England. So, but expect that if you're buying a peachy opportunity where there's potential to apply for prior approval, or indeed that the vendor's already applied for it and achieved it, then you're going to be paying premium price because it's the kind of property that people want to go for. And that is because there's a lot of residential investors moving into that space. They recognise commercial, so they want to move into commercial to resi. But the problem with that strategy, and it's a great strategy, don't get me wrong, is that a lot of these conversions don't actually stack. So you need to really know what you're doing. And when I talk to clients about some opportunities they may have in that space, some work incredibly well, but others really don't. And actually, I can see commercial angles, so commercial to commercial angles, that actually work a lot better. So don't just think that the silver bullet is to convert properties, because you're potentially going to have higher asking prices, but you're also going to be in a lot of competition. And actually, if we look at multiple exits, because that's one of the rules of commercial, we can see that actually there are a lot of other strategies that you can pursue. And I've recently had a client that came onto my board, and he does commercial to residential, and he's not been able to get prior approval on a property, and he's kind of overwhelmed with the amount of commercial interest. Now he's started to divert his attention into commercial, and how much greater his returns are going to be as a result. So don't assume that the commercial residential is the only path that you can do. It's great as an ultimate exit, but not every deal will stack in that space. So expect to pay higher prices. Whereas when there's opportunities that the masses just can't see, where you've got a motivated vendor, perhaps the property's been on the market for a long time, or I've had a situation recently with clients where business partners have been breaking up, your responsibility as an investor is to find out why the vendor is selling. then there can be incredible commercial opportunities. Because here's the thing, we see a lot of undermanaged, badly managed commercial property in the country. And, where leases haven't been renewed, or where, kind of management hasn't been done properly. And so there's a wide open goal very often to be able to asset manage these properties, put everybody on longer leases, maybe increase rents, improve the tenant mix. And ultimately, what that will do is increase the value. And with commercial, you need to know what to look for. So when I work with my clients, especially my board members, one of the very first sessions I have with them is telling them what to look for, because ultimately you need to kind of get your head into that space. So it is like putting a different pair of spectacles on and actually looking at properties in a different way, and not just thinking, oh, I've got to do a conversion, but actually realizing that you can keep as commercial and still make some significant amounts of returns. So there's definitely been motivation in the market, and I can see that motivation increasing. And I've got clients who are achieving significant percentage discounts on asking price, a third off the asking price, kind of 30 to 40%, 20% of asking prices, because ultimately my advice is to ignore asking prices, and is just to look at what you can afford to pay for that property. And if you can't get the offer accepted, then just put it into the follow-up file and follow up, because ultimately it's not about getting a percentage price off the asking price and thinking that you're getting a BMV or below market value deal. That's absolutely not how it works in commercial. You start onto kind of, where do I have some margin to make some money from my asset management? Therefore, what can I pay? And I work from there. And very often, you don't be surprised if that's way off the asking price. And ultimately, you just need to stick to your guns and follow up, because you can very often get deals in follow up where motivation increases. But we're seeing a lot of vendors coming off 5-year finance. Obviously, rates were a lot lower in 2019, 2020. We're seeing, obviously, letting in some areas a lot more difficult. Perhaps you could repurpose the different types of commercial uses. And so I'm generally seeing motivation a lot more in the market. And there's also been a lot of vendors who've been told by their agents that, don't worry, the market's going to recover, So have been holding off selling, but actually the market hasn't recovered. And so now they're getting to the point where they're like, you know what, I'm just going to sell out because I can't see the market recovering anytime soon. So definitely don't pay asking prices. If it works at the asking price, obviously that's fine. But if it doesn't, then don't think there's something wrong with your numbers, because there won't be. Pay what you can afford and go from there. And there's certain types of strategy as well that are working really well. So I'm seeing a lot of properties coming onto the market that are just being badly managed. They've been in family trusts or in family businesses for a very, very long time. The owners are looking to retire. Maybe the family aren't interested in taking it over, and they just haven't been managed well. They've just, commercial, the great thing about commercial is you can have hands-off assets, but you do need to have some form of management, like making sure that leases are being renewed, making sure that properties are being repaired and maintained properly. And so quite often, even the basics aren't being done from properties that have been held for a long time. And so it's a case of finding those properties and understanding what you can do with them from an asset management and a management perspective to make sure that you can add value. So I'm seeing a lot of that type of property coming up. Second, multi-let is working really, really well at the moment. The banks really like multi-let properties as well. So I'm talking about either buying a single let and converting it into multiple units. So that could be dividing up an office suite. That could be dividing up industrial into smaller units. There can be lots of different ways that you can repurpose. You can even split retail, or loads of different types of property. You can have mixed use, but ultimately it's about finding an angle, and it doesn't work everywhere, obviously, finding an angle where smaller units, so the sum of the parts is greater than the sum of the whole. And obviously this works really well in residential, in flats and title splitting, but you can do exactly the same in commercial. And the beauty of this is that commercial finance really likes this strategy. Multi-let for you as an investor can mitigate risk, because obviously you've got lots of different tenants paying the rent rather than relying just on one. And so if something happens to that one tenant, perhaps you may not be able to pay your mortgage. Whereas actually, if you've got lots of different tenants paying the rent, then actually you are, your risk is much more covered. And that's why lenders really like multi-let space. So you tend to find better rates, better loan to values in that space. So multi-let can work really well. I've got clients doing this really, really successfully in offices. I've got clients doing this really successful in mixed use and in industrial. But obviously it doesn't work everywhere. So you need to understand your market really, really well. The third thing I think that's working really well is mixed use, commercial and residential. Now, what I'm not talking about here is buying something that you can convert later. It's about buying something that's already converted, where the flats are above 30 square meters, maybe above a shop or above ground floor Class E, and that you can do title splits. And this is working really, really well for clients at the moment. You can get significant pricing advantages from this. The sum of the parts is definitely worth more than that of the whole. And these kind of properties, they tend to fall between two stools. They fall between residential agents and commercial agents, and neither really know, you will find the odd exception, but neither really know how to price them properly. So you can find some great buying prices in this space. So mixed use, residential, commercial can work really, really well. Another strategies that are working really well, roadside retail. You can get some really nice exits on that with, institutions and family offices looking to buy that. So that would be a case of putting fast food or petrol filling stations with food stores, or other kind of drive-through uses on arterial roads where there's good car movements past the property or the site. So buying the site, doing conversion, getting a long lease from a fast food operator or a food store operator, and then potentially exiting out to a fund or others can work really, really well. The specialist niches that are working really well at the moment, like paddle, if you go on the requirement list, which is the kind of market standard for requirements from operators, you'll see probably 2 pages of paddle court requirements. It's a massive craze. Pickleball, paddle, really big craze at the moment, and lots of requirements. It's perfect for repurposing old retail warehousing, like old Toys R Us. You'll see them popping up in those units all the time. And let's face it, we really needed some uses to fill those up. But also in some industrial as well can work really well. They've got very clear size requirements. They're usually not just paddle courts. They usually have a cafe and maybe a gym as well. So, and they need good car parking. So have a look at those requirements and see if that can work. And there's other specialist requirements like that in the market too. Also, but the beauty of commercial really is that you don't need to do anything particularly special. You can just increase the value of a commercial unit by letting a vacant unit. You can improve the value by extending a lease or, a break clause not being operated, because it's all about risk. It's all that's reflected in the yield. And so I think this is something that people miss with commercial. You can keep it super, super simple. And I think there's a perception that commercial property can be really complicated, but actually, that kind of strategy, as long as you know what you're doing, is very simple. So don't overcomplicate it. Look at areas where there's great supply and demand, and definitely niche your strategies to find strategies that can work for you.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So I promised you a little look ahead to 2026, and obviously I'll do more on this as we kind of draw in, as 2025 draws to a close. But I can't see the market increasing anytime soon. I don't think the government policies, and obviously we're all waiting for the budget next week, so if you listen to this afterwards, you'll know what happened in the budget. This is in November 2025. But the government policies aren't particularly giving the markets confidence. And of course, going back to businesses and doing tax raids, commercial property is occupied by businesses. They are the tenants. And so anything that affects tenant confidence affects businesses, affects commercial property. Coupled with the fact that there's little confidence at the moment from the markets in the government, so bond yields will stay high. So we're basically hitting tenant demand and we're hitting capital values. So don't expect the market to recover anytime soon. Also, we have to kind of twin that with what's happening globally in terms of the wars, in terms of Trump's America. Everything is kind of conspiring to either create a downturn next year or at the very least a bubbling along the bottom. So I'm never one to talk the market down, genuinely. So obviously keep a close eye on that market. My crystal ball can sometimes well and truly go on the blink. But experience has shown me that there needs to be a certain set of circumstances for the market to recover. And I just can't see that at the moment. The point of kind of telling you that really is that there's going to be a world of opportunity next year. There's going to be people existing owners are having to sell because they can't refinance. People have been holding off for a very long time. Vendors have been holding off, not selling, and now feel like they really do need to sell. There's going to be, I expect to see negative news headlines, and of course that will affect sentiment as well and increase motivation further. So the kind of tips and tricks in this market really are to build great relationships locally, not just with agents, of course they are so crucially important, but also, go to business networking, meet the end users, meet the tenants, find out what they're looking for, find what's booming, and your relationship with agents will mean that you hopefully can get properties sent to you off market. Niche your strategies, make sure you're investing in locations where there is great supply and demand. So everything working in your favor, small supply and lots of demand. Try and get longer leases in place if you can, and ultimately work out your finance strategy as well in terms of when your leases expire, in comparison to whether we think rates are going to come down, etc. But I think there's going to be a world of opportunity out there. Allocate some time. Last week's podcast was all about allocating time for commercial. And some of this stuff is literally about daily habits. So if you can allocate time to find commercial property, then it will reap rewards over the longer term. But I can definitely see this market continuing for some time, and I think there's going to be some fantastic opportunities. So I will obviously keep you updated. I'm here weekly for the next year, plus. But thank you so much for joining me over the last year. I couldn't be more grateful for your support and the fantastic feedback I've had over the last year. If you'd like to support this podcast further, please do hit subscribe. It really does help in terms of rankings, and obviously will mean that I can continue doing this much further into the future. And if there's any topics that anybody would like to hear, then obviously do feel free to contact me. So thank you so much. It's been a pleasure serving you over this year, and I look forward to the year ahead.